Good day traders, welcome to my YouTube channel. In today's video, we are going to make a weekly forecast for the coming week. And before that, if you have not yet subscribed, please subscribe, like the videos I upload, and always follow my channel. So before we begin the weekly forecast, we always go to the Forex factory and we see the coming week fundamental analysis. So we see that on Monday we have no red folder news, and it's a bank holiday for GBP. That means we shall see a quiet holiday, a quiet day on the GBP. We have no red folder news for the USD, so it could be a consolidation setting for the move midweek. On Tuesday, we have red folder news for the USD, consumer confidence. So we may see the manipulation and expansion of the week on Tuesday. On Wednesday, we have no red folder news for the USD. It's only AUD that has CPI. So we could see another range-bound market for the USD pairs. On Thursday, we have red folder news for USD, GDP, that is gross domestic product, and unemployment claims. So we could see the biggest move of the week on Thursday, going into the end of the month. On Friday, we have red folder news for the USD and Euro. So basing on the fundamental analysis, we could see uh, an array week consolidation, then manipulation on Tuesday, and then the expansion could come on Thursday and Friday, basing on the analysis for the fundamental. So back to the charts. On the monthly time frame DXY, we were waiting to leave this nasty range that we have been in since 2022. So we are seeing a very good expansion on the monthly time frame, and we are only waiting to see how price will interact with this previous fair value gap on the monthly time frame that led into this range. So we are already in the fair value gap. Yes, it has been retested so many times, but it has been holding price and not letting it to break through. So we could see some bit of a break and a retest on the monthly to continue lower, targeting these lows. However, now our eyes are on the way the market is going to interact with this fair value gap. If we see a rejection, then we could go back in the range and we start trading the support and resistance. However, now we are disrespecting the mean threshold, that is the 50% level of the fair value gap, going lower. So we could see some range expansion to the downside. So our bias, we are still bearish until proven otherwise. On the weekly time frame, uh, price came and took out this low very well, which we were anticipating at the start of this week. I remember telling you if we are to go lower, we have to break this low, and we continue lower without massive rejections to the upside. So that's what the price did. We started the week, we broke to the downside. We were looking at this fair value gap, which we never retested, and now we have another fair value, small tiny pocket of fair value gap. I call this a fair value gap because the previous candle is a wick. This candle here, let me first remove this. This candle here has a wick, and even the previous week was an inside bar of this candle. So there is still a fair value gap, being that this candle is an inside bar. So we are taking this candle and this week that has closed, and we see there is a gap within this price action. However, the expansion for last week was too much. We don't expect, if we are to go to the downside, to have a deeper retracement past the 50% of the previous week. So what we expect is price, if we are to go to the downside, price should not violate the 50% of the previous week candle. And what are we targeting? We have our obvious draw on liquidity as this low, which may act as support. So this swing must hold in order for us to have the bearish bias. So you can term it as a draw on liquidity on the weekly time frame. Even on the monthly time frame, it's the same draw on liquidity. We also have this order block, which is aligning with our draw on liquidity. So we see this may be a point of value in price. As we are going lower, we have to be conscious of these two levels. Don't hold your markets when you see price coming or reaching these levels. We could say deeper pullback upon reaching such levels. So we can name them as our draw on liquidity, and it can be used as our point of references on the lower time frames. On the daily time frame, I marked this pocket of uh, box here, which I referred to as a gap, and the previous week candle. And I said if we are to go lower, we should not violate this previous week candle. So this is a previous week candle, the whole of this box. And if we are going lower, we should not violate the 50% of the previous week candle, which is aligning properly with the order block here. So let us remove this previous week candle. So if we remove this, we remain with this order block. And now we are narrowing price action. So on the daily time frame, if we are to go lower as our bias for the next week, we should not violate the 50% of this order block. So our bias being bearish and we are going lower, these are the areas that we shall look at. Should price come above this, then we know that we are going back into the range for the rest of the week and the month. So we cannot go lower on our weekly forecast to the 4 hour. We shall look at the 4 hour in the coming week. Let us look at Euro USD. On the Euro USD monthly time frame, we had this swing high, which we had marked as our draw on liquidity, and we expected price to come and interact with it. However, we have already violated it, and the price is heading higher. And where is it heading now? To this swing high. So if we are to head higher, we should look at this swing high as our draw on liquidity. And the same swing high is perfectly aligning with this order block, which could bring some price rejection intra-week and intraday. So as a trader, you have to look at these two areas on the monthly time frame. Should price come closer to them, then you start knowing that we are in the rejection levels, and you take part of your profits. On the weekly time frame, you see the areas are perfectly aligning with the monthly time frame. And if we are to head higher on the weekly time frame, we know that when the week is starting, we have that manipulation. The manipulation should not violate the 50% of the previous week um, candle. So if we are trade higher, we expect price to come and it shouldn't violate the 50% of the previous week. So on the daily time frame, we look at this. We also have in the marked area of the 50%, sorry, of the previous week. The whole of this box is a previous week candle. We see there is a perfect order block. So if we are trade higher, we should not violate this order block. Price should come interact with the order block to go higher. So that is how we can narrow our bias. However, we see there are some nice fair value gaps below the order block, but our bias, since we had a very big, massive expansion to the upside, and we still have areas of draw on liquidity for the higher time frame, that is the monthly, we don't expect to have a deeper pullback. It could be, but my bias is the pullback should not exceed the 50% of this order block in order to go higher. So we are still bullish on EURUSD until proven otherwise. If we are to go bearish, we have to first break such areas of interest in order to go lower. However, now we are bullish. On GBP USD on the monthly time frame, we had our draw on liquidity. This candle swing high was the latest draw on liquidity, and we also had this area. So these two areas were our draw on liquidity, and they have all been run. So what are we looking at as our rejection area or as our area of drawn liquidity? We have this order block on the monthly time frame, which price is already interacting with, and our eyes are on, will it be rejected or it will be disrespected to go higher. So if it is to hold, it should disrespect the 50%. If it is not holding, um, it should we should see a rejection before the 50% level. However, we are seeing it is still a massive monthly candle going to the upside. It is breaking the highs very well, and we are still bullish. On the weekly time frame, uh, we see the levels we have done from the month are still holding. The swing high is okay. The previous swing high has been broken perfectly, but we have not had a deeper retracement to the weekly time frame. So we have this order block on the weekly time frame, which could be potential area for rejection, sorry, for retracement if we are to go higher. Remember, we are from internal range liquidity to external, and now we have broken external levels, two external levels. So we expect now to go back to the internal range liquidity for some retracements. So if we are to retrace to the downside, we should also not disrespect the 50% of this order block, or we could see some small pocket of tapping in, wicking in the order block to go higher, and we also target this monthly order block that I have drawn here as our potential draw on liquidity. So we are still bullish, but we are looking at how price is interacting with the market. On the daily time frame, we see that there is a small order block here, but I may not expect it to hold since below it there is a weekly a higher time frame order block. Remember, if there is a higher time frame PDRA on the same time frame you are looking at, the higher time frame must hold before the lower time frame. So here we have a weekly order block, which is perfectly aligning with the monthly. So we expect this price, if it is retraced, to come into this order block in order to go higher, and this daily order block could not hold. Please mark my words, it could not hold. That is my own bias. So we are still bullish on GBP USD. Remember, when we are bearish on DXY, we are bullish on GBP USD. So that is the analysis I can make for the coming week. We are closer to the end of the month, and we could see uh, some retracement. Remember, it is manipulation, expansion, and coming back to the range. So the month could come back to its range, and we have a good close of the month. Otherwise, I wish you a nice trading week. May the markets go with you.